The Naples area real estate market just took a weird turn. It's like a roller coaster ride right now, with unexpected twists and turns that have left everyone scratching their heads. Home values continue to climb, inventory is up, home sales are still in a decline. On this video, we'll look at the Florida real estate market and the Naples area real estate market. Stay tuned. What's up, everybody? I'm Rob Wozner, a local realtor right here in Southwest Florida. If this is your first time on my channel and you want to know everything about eating, sleeping, working, playing, and the real estate market, this is the channel you need to subscribe to. So hit the subscribe button and tap the bell so you're notified every time I drop a new video. Florida's economy and lifestyle continue to attract people who want to live and work in the Sunshine State. About 1,218 people move here per day. The need for homeownership opportunities remains high, but increased borrowing costs, statewide inventory that is still below pre-pandemic levels, and other factors continue to affect the market activity. After reviewing the report, I strongly believe that the surge in summer travel contributed to the reduction of home sales in Naples this June. The report showed a 13.6% decrease in overall closed sales for the month to 837 closed sales, and that's down from 969 closed sales back in June of 2022. Let's take a look at the statewide numbers, and closed sales of existing single-family homes statewide totaled 26,071. That's down 7.9% year over year, while existing condo townhouse sales totaled 10,494. That's down 11% over June of 2022, and that's according to the data from the Florida Realtors Research Department. For the second quarter of 2023, statewide single-family home sales totaled 75,801, and that's down 11.2% from the same quarter in 2022, while statewide existing townhouse condo sales totaled 31,926. That's down 17.7% year over year. Closed sales, those are statistics that occur from 30 to 90 days plus after a sales contract has been written. Though the dip in closed sales appears temporary and may not linger into July's closed sales data, as overall pending sales, which are homes that are under contract in June, increased 0.8% to 800 pending sales. That's up from 794 pending sales. And June showings increased slightly from showings reported back in 2022. Now, if we take a look back in June of 2022, the typical interest rate on a 30-year fixed mortgage rose to about 5% after starting the year around 3%. This June, by contrast, the typical 30-year fixed rate mortgage was between 6.5% and 7%. In light of that headwind, a 7.9% year-over-year decline in closed single-family homes is understandable. As a monthly gap between closed sales this year compared to a year ago continues to shrink, we may see sales rise year-over-year in the coming months. And if rates remain stable for the remainder of this year, or especially if they start to pull back just a bit, we may very likely see sales continue to trend along a seasonal path typical of pre-pandemic years, such as back in 2019. Fortunately for homeowners, slow sales in June did not impact home prices, as the median close price reported in June increased 0.4% to $602,494, and that's up from $600,000 back in June of 2022. The statewide median closed sales price for single-family existing homes in June was $420,000, the same as the previous year, while the statewide median price for condo townhouse units was $325,000, and that's relatively the same as the June 2022 figure. Change in consumer sentiment is coming as people get more comfortable with the higher interest rates. I think they went up too fast, and it frightened a large segment of home buyers, but we're starting to see more price negotiations and realistic list prices. The percent of list price received during June decreased 2.9% to 96.2% from 99.1% back in June of 22. Last year, sellers were immobile on prices, but I haven't heard of any bidding wars this year, and the drop in list price received indicates more price negotiations are happening. Buyer hesitation today is fueled by the three horsemen of the home buying apocalypse: insurance, property taxes, and interest rates. Despite these challenges, the Naples area remains a highly desirable lifestyle destination, especially for high net worth individuals. In the last year, there have been 193 homes sold over the $5 million price point here in Naples. Some good news for home buyers: overall inventory continues to rise compared to 2022 levels. June had an 8.2% increase in overall inventory to 2,659 homes, That's up from 2,457 homes. I believe this increase was due to low sales for the month, not because of new listings hitting the market, which decreased 28.2% to 860 new listings from 1,198 new listings back in June of 22. Statewide, looking at end-of-month inventory of active listings of single-family homes in 2022, and that's as rates started to rise and the market shift began to become apparent. Initially, there was a rapid rise in inventory levels as new listings started coming onto the market at a high rate. But once that short-lived burst in new listings reversed in the latter half of the year, inventory growth stabilized. And that trend has continued throughout 2023. As of the end of June, single-family inventory was 13.8% higher than a year ago, but that gap will be closing rapidly in the next month or two. Overall, we are at an inventory level that is about halfway between our pre-pandemic inventory level at this time of 2019 and the low point during the pandemic of 2021. The improvement we've seen in inventory levels is a sign that upward pricing pressures are moderating. On the supply side of the market, single-family existing homes were at 2.8 months supply in June, while condo townhouse properties were at 3.6 months of supply. While inventory is still super low, things are shifting more toward the buyer's advantage. Part of this is due to the rise in interest rates, making the exact same home for the exact same price much less affordable to buyers. This has caused the average days on market to increase quite a bit compared to the last couple of years. In order to combat this, we have seen almost a 2 times increase in seller concessions compared to a year before. This means that sellers are now actually taking money out of their proceeds from the sale of their home and practically handing it over to the buyer. So what does this mean for you? Well, if you're a seller, here's what it means. In order to avoid a disaster by having your home sit on the market for months and months on end, it may be wise to consider positioning your home as a more valuable than the others by offering seller concessions up front. If a buyer knows coming into your property that regardless of where rates are, they have the opportunity to get some concessions toward them, it positions your property as a much more valuable than those not offering the same. Just take a look at what builders are doing right now. They're using this exact strategy to position their homes as the obvious choice to potential buyers. And what does this mean if you're a buyer? Well, you have an opportunity to fight the rising interest rates. You can request to have seller concessions go toward an interest rate buy down. While it may not be the same as the 3% rates we were lucky to have over the past couple of years, it's better than having that full rate. And in the future, as things calm down and interest rates get tamed down a bit, you can always refinance. Let's keep an eye on this situation and maybe even brainstorm some strategies to ride this wave together. I'd love to hear your take on all of this madness. And thank you once again for watching my market update report. Please leave a comment at the bottom of the video and let me know what you think of this and what you think is going on with this madness in the real estate market. And I look forward to seeing you on my next video.